This uptrend has not been broken.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Cathie Wood dives into the Trump-Elon feud. Let's catch her to hear more.
On this next chart, you can see the core PCE index. This is very important, a very important inflation metric to the Fed. And here you can see there was a little bit of stall in the 2.5% to 3% range, and it is starting to break down. You can see one of the reasons is here. Gasoline prices are moving down, certainly on a year-over-year basis. They're down quite a bit. And you can see trueflation. So this is the measure of inflation, real time, 10,000 items analyzed in real time or updated in real time. And a lot of people have been wondering if the tariffs would take this back into the 2 to 3% range. And it got us to 2, but the latest tick has been down to 1.8%. This metric tends to lead the CPI by, I think it's 60 days, if I'm not mistaken. So it would suggest there probably are some more inflation surprises. On this chart, real GDP versus productivity growth. So I mentioned nominal GDP is I think it's a little below 5%. This is real GDP in the purple. You can see it's a little below 2.5% as of the first quarter. We think it will continue to decelerate here.
The latest U.S. jobs report delivered mixed signals, adding uncertainty to Bitcoin's short-term outlook. Employers added 139,000 jobs in May, slightly above forecasts but down from April's revised figure of 147,000. The unemployment rate held steady at 4.2%, with most job losses coming from the government sector, suggesting relative strength in private employment. Despite initial expectations, the data failed to move the crypto market significantly. Instead, Bitcoin traders are turning their focus toward the Federal Reserve. With job growth in line with expectations, analysts believe the Fed will maintain its current cautious stance on interest rates rather than rushing into cuts. The central bank remains especially concerned about inflation, which is now closely tied to evolving trade policies under President Trump. For Bitcoin, this means high interest rates may continue to support a stronger dollar while dampening ETF inflows. Yet with macro conditions still evolving, a sudden policy shift isn't off the table.
On this first chart, you can see the deficit as a share of GDP, not seeing any improvement yet. And Scott Bessent has committed to, where you see the X there, getting this to 3% as opposed to nearly 7% or 7.5% over this administration's tenure. And we think it's going to come about more through real growth accelerating, and we think that productivity-led growth will be very powerful in this regard. And of course, there are some efficiencies that are being built into this bill, however much Elon Musk does or does not like it. And the reason Elon does really focus on government spending is it is taxation, one way or the other. We're going to have to pay this through taxes now, taxes in the future, or the cruelest tax of all, inflation, inflating our way out of the debt. And if anything, we think deflation is where we're going here. And so this debt will be very difficult to service if we do go into a deflation unless unit growth really booms. And we actually think that's possible moving into 2026. So on the next chart, I mentioned corporate tax rates. You can see here, X marks the spot where the corporate tax rate would go if there was immediate expensing of equipment and structures. And you see, you have to go back really to the 40s, the late 30s and 40s, to see a lower effective tax rate. So that will be quite an accomplishment if and when it happens. Here you can see money supply. The growth rate has rebounded after nearly a year and a half of negative in terms of the level falling. And if you take a look at this chart, which goes back to 1960, you'll see that where we are with monetary policy now, or money growth, is at the low end of a range. The range was lower in the early 90s as Chairman Volcker and then Chairman Greenspan were trying to squeeze inflation out of the system. But other than that, it's rarely been lower than this. And if we're right that the velocity of money is slowing down based on all of the uncertainty out there, tariffs, tax bill, government spending, and so forth, then this I think the number is roughly 4.4% growth on a year-over-year basis, is lower than nominal GDP growth is right now. And if the velocity of money is slowing down, declining as well, that's going to be another pressure on GDP. So we do think we're entering the last leg of this rolling recession. I have no idea if we'll actually see another negative GDP quarter, but we do think the velocity of money is arguing against a very strong GDP growth.
Bitcoin enters a crucial week with $100,000 emerging as the key support level for bulls. After a volatile few days, BTC managed to close just above $106,000 on June 8, sparking cautious optimism among traders. Analysts like Rec Capital point to Bitcoin breaking its 2-week downtrend and challenging resistance at $106,600. If the momentum is still fragile with short-term holders sitting near break, even around $106,200, a zone ripe for potential selling pressure. Liquidity continues to dominate market dynamics. Large traders are exploiting liquidity clusters, with $100,000 now acting as the dividing line between recovery and deeper correction. According to trader Don Crypto Trades, a drop below that level could ignite a wave of long liquidations, while upside liquidity toward $112,000 remains in play. A 10% move upward could trigger $15 billion in short liquidations, indicating how primed the market is for a breakout. Macroeconomic forces add another layer of complexity. CPI and PPI data due this week could shape the Federal Reserve's next move ahead of its June meeting. So far, a rate cut is unlikely, with markets pricing in potential easing no earlier than September. Meanwhile, Bitcoin's bullish thesis is reinforced by technical signals like rising daily closes above moving averages and a classic volatility squeeze forming under $107,800. Despite the drama between Elon Musk and Donald Trump grabbing headlines, some analysts believe the market's reaction has already played out. With sentiment shaken but not broken, many see this as the calm before Bitcoin's next explosive move, potentially toward $120,000. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.